Hello, it's Tuesday the 12th. I'm FxPlew and this is the market brief. Now, even though the Bank of England was the first G7 central bank to raise rates, Bailey was criticised for not acting more aggressively when inflation seemed to be out of control. Many then expected the rate cuts to follow more quickly, especially once inflation was nearing their 2% target. But the MPC held firm with the pause, and it took until last month for the vote to deliver the first rate cut. While the economy may be crying out for some cuts, having failed to grow for the second consecutive month in July, concern still remains that cutting too quickly could reignite inflation. As such, sentiment is still split around 50-50 ahead of the meeting next week. Things are more certain over in the US, where a 25 basis point rate cut is widely expected from the Fed next week. Headline inflation dropped to 2.5%, down from 2.9% in July. And while core inflation was unchanged at 3.2%, the drop beat market expectations. Morgan Stanley has been on. Economists there fear the economy could fall into recession by Q2 next year, and they want the Fed to cut rates more aggressively. The market expects the Fed to cut at each of the remaining meetings this year, but Morgan Stanley is calling for a 50 basis point rate cut to kick things off next week. However, this does seem a little unlikely, as the broader view puts a recession risk at around 30% or less. And while job creation and GDP growth are still positive, Powell should still have sufficient ammunition to stave off any serious slowdown. In the market, the dollar posted some gains yesterday. The dollar index peaked around 101.80 and sterling tested support around the 130 level against the dollar. We kick off this morning. We are around 130.50 against the dollar, 118.45 against the euro, and euro dollar is around 110.20 on the open this morning. That's it from me. Have a great day.
If you do not have a clue, then just tweet through and ask FxPlew.